Let's break this down as simply as possible so beginner investors can understand. We'll cover three big indexes: the S&P 500, the Dow Jones, and the Nasdaq. First, the S&P 500, short for Standard & Poor's 500. It's a stock market index made up of 500 of the biggest publicly traded companies in the U.S. Think of it like a report card for the U.S. economy. It covers many industries. Examples inside it: Apple, Microsoft, Amazon, Johnson & Johnson, JP Morgan Chase. If the S&P 500 is going up, it usually means the U.S. stock market overall is doing well. Beginner takeaway: the S&P 500 is the most popular measure of the overall stock market's health. Next, the Dow Jones Industrial Average, often called the Dow. The Dow is an index of 30 large, well-established companies in the U.S. Examples: Coca-Cola, McDonald's, Goldman Sachs, Boeing, Apple. The Dow has been around since the late 1800s, one of the oldest market indexes. But since it only has 30 companies, it doesn't represent the whole economy as well as the S&P 500. Beginner takeaway: the Dow shows how big traditional U.S. companies are performing, but it's a smaller snapshot than the S&P 500. Third, the Nasdaq Composite, usually just called the Nasdaq. The Nasdaq includes over 3,000 companies and is known for technology and growth stocks. Examples: Tesla, Meta, Netflix, Google, Alphabet, Amazon. It's more focused on tech and innovation, so it can be more volatile, moving up and down faster than the S&P 500 or Dow. If you hear Nasdaq is up, it often means tech stocks are booming. Beginner takeaway: the Nasdaq is like the tech thermometer of the stock market. Quick summary: S&P 500, 500 biggest U.S. companies, best overall snapshot. Dow Jones, 30 giant established companies, shows traditional big business. Nasdaq, 3,000 plus companies, tech heavy, shows tech and growth stocks. So S&P = overall market, Dow = big traditional companies, Nasdaq = tech and growth. A tip for beginners: use these indexes to understand market trends, not as exact investment advice. If you want broad exposure, consider index funds that track the S&P 500 or Nasdaq. Start simple, stay diversified, and use these indexes to check the market's pulse. Thanks for watching. Follow for more beginner-friendly investing explainers.